Wonderful. All right. Well, thank you everyone for coming tonight. This is a partnership I've been looking forward to kicking off, and I'm so glad it came together. Our session tonight is called All About Student Loans, hosted by Union Home Mortgage Foundation. So they have a really awesome curriculum of programs and content called U Launch, and our partners there are going to explain a little bit more about what that is. But one of their sessions they put together to share with all of us is telling us all about student loans, because I know that even though I've had student loans before in my life, things change and I need a refresher. And so as you start to explore about how you're going to pay for your college or educational career, this is going to be a really helpful session. We also have our friends and partners from Ivy Tech on here as well. And so Union Home Mortgage Foundation invited Ivy Tech to be a part of the conversation tonight. As you all know, they're well known here in Central Indiana, all over the state of Indiana, and have really great opportunities to pursue education after high school. So I will kick it off to Hannah, our partner at Union Home, and she will share with you all the session tonight, and we'll just take it from there.
Thank you, Stephanie. Hi, everybody. Thank you all for joining us and letting us present to you. I'm Hannah. I'm with the Union Home Mortgage Foundation, along with our executive director who's on the call, Christina Fagan. With that, we are a corporate company called Union Home Mortgage, and we have two of our partners on the call today that will do some of the presenting, along with Shawnee from Ivy Tech. So big shout out to Shawnee for partnering with us and helping us out with this presentation as well. A little bit into U Launch. Under our career readiness pillar of our foundation, this is our signature program. And kind of like Stephanie touched on, we give financial literacy, career development, professional development courses, and just things like that to nonprofits and students to either progress in their college career or even just the workforce as well. So like she said, tonight we're going to touch on all about student loans and do a deep dive into that, and our partners and Shawnee will present on that. But first, I'd like to introduce our volunteers, and then we'll get started with a short introduction of Union Home and kind of who we are before we jump into student loans. So I will let Erin introduce herself first, and then Krishana.
All right. Hi, guys. This is my first time volunteering with Union Home Mortgage. I'm super excited. I really wanted to do this course because I did just graduate college in May. So I thought that I could give you some super relevant experience because, you know, I'm still dealing with student loans. So yeah, I'm excited to get to know you guys.
Great. And then Krishana, if you want to introduce yourself.
Sure. I'm Krishana Cunningham. I am a diversity and inclusion officer at Union Home Mortgage. I came from the HR team. I've been with the company for just over 4 years. This is my second time volunteering. It was a much smaller group, so I look for it. I love, sharing my information. I dealt with student loans for longer than I wanted to, so this is great information to take in, and hopefully you guys get a lot out of it. Ask a lot of questions. We're here to be helpful.
Definitely. Thank you. Now I'll share my screen and we can start with the Union Home presentation. Great. Let me know if you all can see that. All right. And then good. And then Krishana, you can take it away.
All right, so like Hannah said, we are going to start with just a brief overview, letting you know a little bit about Union Home, what we're all about before we jump into all about student loans. So to start out, while I'm going over just a little brief history, if you guys can start thinking about, and this is more directed to the littles, what is a mortgage? If you want to start typing it in the chat, or if someone wants to come off mute when I get there. So Union Home Mortgage, we are a full service mortgage banking company. We started in 1970. Our corporate headquarters is in Strongsville, Ohio. So it's about 20-ish minutes outside of Cleveland, Ohio. And we support homeowners across the country. We have 3 branches of business. Retail is our largest branch, and that's what you typically think of when you think of a loan transaction. Wholesale, where we kind of pick up the loan process in the middle, and then consumer direct, where we buy leads of borrowers looking for homes. So thinking about, I don't see anything in the chat. Do any of the littles want to come off and let me know what a mortgage is? What do you think a mortgage is? Mm, Okay, so I'll jump right in. Mortgage is actually the loan taken out to purchase a home. So the home is used as collateral until the loan is paid. So Jaden, thank you. It's actually, they call it your mortgage payment. So you're paying off the loan when you're making a mortgage payment. Thank you. So the UHM family, Bill Cosgrove, you'll see him in that top picture here. He bought the company in 1999, and he's the sole owner of the company. Al is his right-hand man. It's always Bill and Al when we refer to them, but we are an award-winning independence mortgage lender. Privately owned, we deal with residential loans only. We have over 1,300, probably closer to 1,400 partners now, over 170 branches in 45 states. We have goals. We hit over a $10 billion lender last year, so that was very exciting to us. We have goals to hit over 13 billion this year. We are a top workplace. It was recently announced that not only have we won the award 6 times in a row in the Cleveland area, but nationwide, we are the #1 workplace of companies of our size. And that's just based on the partner feedback and survey questions that we ask them each year. So moving on to the next slide, talking more about our culture. So at Union Home Mortgage, our partners really live by shared values, which we refer to as our code of conduct. So things like respect, open communication, accountability, our commitment to inclusivity. It was very important for us last year. Diversity and inclusion has always been important to the company, but last year to really focus on that, so much so as making that my full-time job. That's very important to the company, and really defining those parts of our code of conduct, making sure that we're tying that intentionally into our culture. Delivering personalized service to our borrowers in the industry. We're honored to be recognized as a top mortgage lender. Our culture is based on transparency, welcoming new ideas. We do this by asking our partners. We're always asking for feedback. There's daily senior management meetings. We have an annual partner celebration. We have corporate retreats. Tours where our managers go out into the communities and ask questions of the loan officers working in those communities. So we're always looking for feedback and really just that open communication and accountability throughout the company. So more about our culture, we're world-class in a number of ways, building the community both inside and outside of the company. So in the past year, we've been recognized as the official mortgage partner of the Cleveland Indians, as well as PBR, which is the Professional Bull Riding Circuit. We have an award-winning internship program called the LEAD Internship Program. This provides every year summer interns with mentorship opportunities, weekly lunch and learns with the different departments within the company, a group project that they work on as a team each year, ways to explore. They do scavenger hunts through the city of Cleveland, team building and networking opportunities. And we've hired 60, and we've been doing the program for a couple of years, and intern to full-time hires, we're over 60 interns at this time. This summer, our class will be 115 interns. So that'll be really interesting. It was very cool that we still had a program last year. Our entire company is, most of our company is virtual now, but we still held an internship program. And we are still planning on bringing in 115 interns, whether we're still virtual, but hopefully we'll be able to get back into our office. We've recently launched a number of employee resource groups, including a women's network and the Young Professionals Network. We're working on a minority network. So just the ongoing training to learn more about soft skills, leadership, the mortgage industry. We also have a great training program. So another key part of our company is the foundation. The foundation, like Hannah said, created this program. It really gives an avenue to our partners to give back to the community through volunteer opportunities like this, as well as many more that we have available. Learning more about key issues and participate throughout the community. The foundation was created in 2015 to help equip families with the tools and resources to achieve economic self-sufficiency so that we can empower families on a path to responsible homeownership. We do this by supporting programs and nonprofits in the 4 pillars that you see here listed on the sheet: financial literacy, career readiness, education, and housing. In the past year, just a few highlights of what the foundation has been able to accomplish. We had over 13 states receive funds. So this was through grants, volunteer, fundraising opportunities. Over 13 states received funds. 318 partners enrolled in our payroll deduction. So this is where, we can I signed up for it, you just nominate an amount to come directly out of your check to go directly into the foundation with each paycheck. So over 300 partners. We've given $1 million since our inception. So that's huge. Again, through fundraising, grants, a number of different initiatives. And there's been $420,000 given this year between 37 grants. So a lot of great accomplishments, a lot of great opportunity to give back to the community. So before I turn it over to Erin, I'll leave you with this. Everything we do is led by our guiding vision that we believe responsible homeownership should be accessible to everyone. So again, that's our vision. That's what our vision that we lead by. The foundation, Union Home Mortgage, really lives by this guiding vision. So I'll turn it over to Erin.
All right, thanks. Okay, so I'm gonna try to make this a little fast for you guys. So the big 3 things that we try to do at UHM, we have 3 main goals. So we want people to understand that buying a house is one of the biggest financial commitments that they'll make, and how to go about that in a responsible manner. We treat all of our applicants and people who are interested in loans equally and fairly throughout the entire process, whether they're buying like a $1 billion home or something like that, or a manufactured house. Everyone is treated the same because they're all equal. They're all making this big investment to have a house for themselves. We also complete the mortgage loan process from start to finish. So I'm a processor, so I get a hold of the loans a little earlier, and I help move them along. All right. So some of the mortgage roles within UHM, like I said, I'm a processor. I have no former mortgage experience. So, don't let that scare you. Don't let any of these big mortgage words or any financial words as you're going through like your FAFSA applications and all that scary stuff. Don't worry, you're going to get a hold of it. It's acronyms, it's a lot, but you'll get there. So, we have roles like closing, so finishing up a loan, making sure everything's in there. Consumer direct, like Krishana said, how we kind of get leads from them. We have originators, post-closing, retail sales, underwriting, and wholesale. So some other roles, because it is a large company, and we do have a foundation, which we're really fortunate to have. There are other jobs such as marketing, servicing, event planning. Like Krishana said, we have the annual partner celebration, which is huge. So we do need a department to take care of things like that. We do have around 1,500 employees, and that is a big task. So some careers and like some nice options at UHM. If you're interested in any careers or internships, which I do highly suggest, internships are some of the best things you can do for yourself. I would go to uhm.com/careers. We will be passing out like a one-pager with this information just so you guys know and you have it in front of you. So some of the benefits that I definitely really like, we do have volunteered time off, which is really nice. I like volunteering. Obviously, I'm here. But one of my favorites is that we do get discounts on loans as employees. That's huge for me. You know, I'm right around the age where I'm looking into that right now. I just think that's super awesome because they share the resources and they want everyone to feel included. We also have 401ks, medical, dental, and vision. I guess mental too, coverage for insurance, which is pretty nice. There's also kind of like pet insurance, things like that as well. And yeah, I think that's it. Do we have any questions about anything like careers, mortgage, anything at all?
I don't know about anyone else, but the pet insurance alone is making me think about switching careers and companies. Don't tell big brothers, big sisters. Sounds like
Great.
you all are doing some really awesome work. And I love that we had that overview of Union Home and the foundation and how that all connects. Thank you so much for sharing that.
Yeah, definitely. That was just a little bit about us, but I know some of you, once you're in your college career and anything like that, if internship wise, we can get you any information on that. But now we will kick it off for our student loans presentation. So let me reshare my screen and let's get into that.
Okay.
1 second. There we go. All right, you can take it away.
Okay, so, you know, we could do introductions if you want. That's up to you guys. It seems that we're all using the chat. So if you want to add anything in there, whatever it is, feel free to use that just as a conversation as well. So I guess we can just kind of hop on into it. Everyone's doing great with call etiquette. Everyone's on mute, you know. All right, so we do have Miss Shawnee joining us from Ivy Tech. She is going to be talking to you guys about some financial aid options and things like that, because I heard this is a popular college in your area, so it just makes sense to partner with them.
Yes. Hi, how is everyone doing tonight or this evening?
Are doing well. I'm having a good time. I love being with our bigs and littles and our partners, so I'm excited.
Yeah, so okay, I understand that you were focusing and wanting to focus on loans. But I'm going to share some things about free aid as well. I hope that's okay. I usually like to push the free aid first before I go into the loans. As she said, I'm going to talk about the federal student aid.
All right.
Paying for college. College is expensive. And we all know that. Anyone who has been in a place where you have furthered your education. But there are ways to pay for it provided by banks and government. So the government is one of the main assets when it comes to being able to borrow and receive free federal aid. First, if you're planning on attending college, you want to make sure that you apply for a FAFSA. This must be filled out in order to receive any federal aid as far as grants, scholarships, or a federal direct loan. You can apply for private loans. However, you still would need through a bank like Sallie Mae, for example. There's different entities you can go through for the private loan, and also, you know, through your main bank. So those are some of the ways you can apply for a loan. alternative loan. That's what that would be called if you would go through like Sally Mae or your personal bank. That would be called a alternative loan. FAFSA opens every October. It used to open on January the 1st of every year, but for prior 8 years, they decided to open the FAFSA up every October. Back then, they wanted us to use our previous tax information. Now you can use the tax information from the previous 8 year or the previous tax year. The FAFSA covers fall of the current fiscal year, and it covers spring and summer of that next current year. You want to make sure that when you apply for a FAFSA, that you make sure you do your FSA ID. Now, any student that has a parent, the parent will have to complete the FSA ID as well. This is how the parent signs the FAFSA. So you want to make sure that when you go in, if you have any questions about FAFSA afterwards, my contact information is there no matter what institution you're planning on attending. So the FAFSA must be completed every year, every fiscal year. So the FAFSA covers 3 semesters. It'll cover fall of the current year, spring and summer of that next year. And you want to make sure that when you go into the FAFSA and fill out the FAFSA application, you are completing and creating a FSA ID username and password for the student and the parent as well. Financial aid is money that is given and paid or loan to a student to assist with paying for college or vocational training. There are several types of financial aid for college students. We have grants and scholarships that you do not have to pay back. This is not, you're not required to pay this money back, although loans are. When you borrow a loan, you're borrowing it from a lender or institution. It is required to be paid back with interest. Now, I'll get into the subsidized and unsubsidized loans later. However, you are required to repay this aid back if you plan on borrowing from a lender. And most of the time you're borrowing from the federal government. So it'll be what is called a federal direct loan. And so I'll get into the loans in the later slides. Federal work study is when you're eligible to work and get payment instead of taking out loans. You can either be employed through your college or you can be employed through an outside employer instead of the institute you're attending. This is where you will earn money as a paycheck that will pay your tuition and fees for college. Okay, grants is awarded. It's award that awards that does not have, sorry, forgive me, I'm trying to get it together. A grant is an award that does not have to be repaid. There are federal and state institutional grants. The federal grant is the FAFSA, which is the Pell Grant. And then the state grant is going to consist of your higher education, which is your Franco-Bannon and the institutional grants, or the ones that you receive from your college. So those are the grants that are offered through once you complete your FAFSA. You have to forgive me on this. I know everything on the top of my head, so being able to go back and read it, you know, so just bear with me because I know this information by heart. So you can move to the next slide. Okay, federal grants. The Pell Grant is the grant that you use per aid year, and it is divided within 2 semesters. The Pell Grant right now is at $6,347. That is per a year. Now, the Pell Grant, it goes up about $200 every a year. So we're going into the 2021, 2022 a year. So it may increase by at least $200 or $300. The Higher Education Award, it had went up to $3,600, which is the Frank O'Bannon Award. Now, all the amounts are based on a family's expected family contribution, which is your income per year. So whatever your household income, this is broke down between the household size and your household income, which is your adjusted gross income. Now, I do want to explain this to you. As students, when you're combining, if you're a student and you file taxes with your parents, that money will be combined with your parents. So I have to push that out there, because we get students to say, oh, I don't receive anything. We have to make sure that we watch that. And it really depends on what institution you're applying for. So depending on the family's EFC, which is the expected contribution, will determine what you're eligible for per a year. Our state grants, the Higher Education Award, which is a Frank O'Bannon, a student must be in 12 credit hours or more to receive that. And then also we have the 21st Century Scholars Award. Any student that's eligible for 21st Century Scholars, you want to make sure that your FAFSA is completed by April the 15th. The Adult Student Grant and the Child of a Disabled Veteran, those are kind of with an exception, because you can apply for your FAFSA after April the 15th and still be eligible for those two grants. But for the most part, the Higher Education and the 21st Century Scholars Award, you must have your FAFSA completed by that priority date, which is April the 15th. Now, I know for COVID, they have changed the deadlines and they have pushed them out. So you want to just keep an eye on that. And then Hannah, you can move to the next slide for me, please, and thank you. Okay, the requirements for federal and state grants. You must have submitted a FAFSA, and you can do that at www.fafsa.ed.gov. It should be ED in between there, so I do apologize for that. So the ED comes after the FAFSA.gov, and then you must complete all requirements. Students must have obtained a high school diploma or recognized equivalent, such as the GED. You must be a U.S. citizen or non-eligible citizen. The males, if you have not registered for the selective service, you want to make sure during the time that you're completing your FAFSA that you say, register me. If you do not know, please make sure you ask your parents. You must be enrolled in an eligible degree or certificate program. And that means that when you're coming into college, you want to make sure that when you complete that FAFSA, you say, you tell them you're either going for an associate's degree or a technical certificate. That must be the question that you put on your FAFSA in order for us to not, for a school not to flag you. State grant recipients must complete the FAFSA by the state's priority date and must be a resident. If you're not a resident of, or wherever your residency is, that's across the board. That's across the United States when you complete the FAFSA. So no matter what state you're in, whether it's in Indiana or not, you have the guidelines are the same across the United States. You must remain in good standing, which is satisfactory academic progress. Each school has a different grade point average, completion rate. I know for Ivy Tech, ours, you have to sustain a 2.0 GPA to even continue to receive your financial aid, and you must sustain a 67%. So that is for our institution, the institution, whatever institution you decide that you would be attending, you want to make sure that you get their satisfactory academic progress guidelines for that institution. What is a loan? A loan is the amount of money lent to you with the expectation that you will pay the full amount back plus interest in the future. So we have the federal Stafford loan, which is actually the federal direct student loan. In order to apply for a loan, you are going to go to www.studentloans.gov. There's two types of loans, the subsidized and the unsubsidized. Now, let me talk about the subsidized. The subsidized loan is the loan that does not accrue interest. Again, it does not accrue interest, but the unsubsidized does. The fixed interest rate at this point is 6.8. That's what the interest rate for the federal student loan is at this point, is 6.8. There's a non-credit base, but must not be in default on prior loans. Any student that has attended college, you want to make sure that if you're planning to complete a loan application, you must go through that entrance counseling. Make sure you read it to your entirety, because a lot of times our students miss it. They miss that if you decide that a semester you do not want to attend college during that particular aid year, you want to make sure that you notify the Department of Education and get into a forbearance program. The forbearance program is a program that will allow your loans to be put in forbearance for 6 months, which that will put a halt on your loans for 6 months. You want to make sure you do that, because we have a lot of students that come into our institution that have applied for the FAFSA and later on find out that their loans have went into loan default. So you want to make sure that if you're a student and you're planning on taking out loans, make sure you read that entrance counseling to its entirety. The master promissory note, this is what you're going to have to complete before the loan is even satisfied or certified. So you want to make sure that that master promissory notice is signed. And not only that, that gives you 10 years. So once you sign it once, you don't have to sign it again for up to 10 years. You just, whatever institution you decide that you're going to go to, you would just change it. So say you're a student at Ivy Tech and you're going over to IUPUI or wherever you live at. If you switch a school, you want to make sure that you update your master promissory note. You may have fees that are taken out before the loan is dispersed. Usually the fees are running anywhere from $12 to $13. The most I've seen is $18. In order to receive a federal direct loan, you must be at least half-time. You must be at least in 6 credit hours or more to receive the loan. Repayment begins 6 months after graduating or dropping below half-time. I do want to make that extremely clear. If you're planning on taking a break, make sure that you call the Department of Ed and let them know, hey, I need to do a forbearance, and this will postpone your loan until you return to school. Once you return to school, the next step you're going to make is getting an in-school deferment. So once again, you're gonna call them, let them know I am registered, enrolled in classes, and I need a deferment. This will keep you from going into loan default. I can't stress it no more than that. Please, please, please make sure you do that if you're planning on taking a break or giving school a rest. The federal Parent Plus loan. This is for the students that are undergrads and they're dependent. It's based on a fixed interest rate and it is credit based. It's credit based. Fees may be taken out by the lender who disperses, which it'll be the Department of Ed. Requirements, once again, you have to be in half-time enrollment and the repayment begins 60 days after the loan is fully dispersed. I want to say something, if I may. It's the parent's responsibility if they take out the Parent Plus loan. If a student, if they take out the federal direct loan, it's on the student, not the parent. And the student has a little bit more leverage than the parent. So I just want to put that out there. The student can take out a loan without a credit report being or getting a credit check. So you want to make sure that when your student is applying for loans, watch this. Now, I'm not saying don't apply for it if the student needs more, but I will weigh the options out and probably make this the last resort. So this is just Shawnee Johnson's opinion. That's it.
Shawnee, that's great. I think as you know, someone that you work in financial aid office at one of our largest educational institutions in the state, I think that we will take your advice on that one. Thank you for sharing.
Yes, ma'am. You're welcome.
Yeah, definitely. And before we change speakers here, if anyone has any questions for Shawnee, or you can unmute or ask her or type it in the chat. She can answer any questions that any of you might have.
I have a question.
Yes, ma'am.
And I apologize. Our internet is sucky where we live, so I might go in and out. So I'm gonna try. I'm not gonna talk fast, but I'm gonna try to keep it. I am a single parent. I went to college. My mom was a single parent, and I watched her struggle making payments for my college. And I think she did the parent plus that you just talked about.
Mm-hmm.
I really don't want to go through that. I want him to have as smooth experience as he possibly can, because it was very bumpy for me when my mom was trying to put me through college. So should he, because I really like that recommendation you just made. I actually just told him to be quiet so I can hear what you're saying. Because a lot of my single parents friends are just like, I don't really want to help pay for college. And it's not that I don't want to help. It's just that I don't want my woes of trying to raise him as a single parent and some of the deals I done cut to raise him, to affect him in college. And I didn't know that he can apply without me. Is that basically kind of like what that is, that he can apply without me?
Yes, ma'am, he can. And that's the reason why I kind of stress that. But what I would look for, depending on what institution he goes to, because a lot of the institutions, they have their own in-house scholarships.
Mm-hmm.
I would push scholarships first and
Mm-hmm.
see what he's eligible for. And if he's eligible for the federal the federal Pell Grant, let him get this Pell Grant, then look within the house of the institution he's at and look at his options for scholarships and grants, because a lot of our colleges have their own in-house scholarships. And you have it depending on when the semester starts. A lot of our colleges, the beginning of semester starts in August. So you have a priority date of July the 15th to start applying for scholarships. And he'll know by July 15th, no later than August the 1st, if he's eligible for any scholarships. So I would do that. And then if he needs the federal direct loan, then I will have him apply for the loan and make the federal parent plus loan the last resort. Not only that, we have people in our communities and our societies that you can get sponsorship from. So make sure that if he can, let him do sponsorship. Somebody will sponsor him. They will pay for him to go to college. They have churches. They have business owners that are giving money away to help students. Just look within your community. If all else fails, my contact information is up there. I can send that to you if you have any questions or concerns about scholarships and grants and how to move forward with furthering his education. There is so much free money out there that they're offering, and a lot of times we just don't know. We just don't know about it.
Okay, thank you so much.
You're welcome.
I too had a question.
Yes.
All right, so you mentioned how subsidized loans don't start you don't have to pay the interest,
Mm-mm.
all that, sorry. But I had a question. So about that, would the interest rate be higher, so it's the same?
No, it's always gonna stay the same.
Okay, sweet.
It's always gonna be 6.8, but subsidized loans does not accrue entrance. The unsubsidized loan is what accrues entrance. And a student would be eligible for the subsidized loan first before they can be eligible for the unsub. So what the Department of Ed would do is they would offer you the subsidized loan first before they offer you the unsub. The unsub has to be, you have to ask about that, or you have to apply for that. So the interest rate is always going to stay the same with the federal loans. It'll go up maybe 2 or 3 years later, but right now it's at a 6.8. And if you need to look for or check that out or do a little research, you can look at www.studentloans.gov, and it'll give you all the information you need about the sub and unsubsidized loans.
Thank you, I appreciate it. And then I had another question, if you don't mind.
No, I don't.
Okay. So, I don't know if you know much about this, but you mentioned the federal Pell Grant along with 21st Century Scholars. And I was wondering, could you use those both together, or is it one or the other?
Yes, you can, because the 21st Century Scholarship is a tuition-based scholarship. So that would pay for your tuition, and the Pell Grant will pay for your books. And then whatever's left over will come to you in a refund. So you'll have your tuition paid with your 21st Century Scholars. Frank O'Bannon and 21st Century Scholars are technically both tuition-based grants. So they will interact. So if you're eligible for the 21st Century Scholars and the Frank O'Bannon, you can only use one of them. The Pell Grant, you can use Pell for tuition and books. That's the only grant that you can use that will pay for your tuition and your books. So if you have a 21st Century Scholars or a Frank O'Bannon Award, that's going to pay for your tuition, and your Pell Grant is going to pay for your books. And then, like I said, anything left over will be applied to a refund, depending on what institution you're at. Did that answer your question?
Yeah, thank you so much. I appreciate
You're
it.
welcome.
Shawnee, thank you so much for sharing all of that information. We had a couple of 21st Century Scholars on the call tonight. They put in the chat, and I'm a proud 21st Century Scholar. So I was glad to see a few more of that. That's a phenomenal program that's just life-changing for so many people, and it was for me too. But definitely there's some tricks and ins and outs and and stuff like you mentioned with the Franco Bannon and how ones interact and how don't. So thank you so much for being
Yes.
so knowledgeable and sharing all that information. I also wanted to share with all the littles that if you're working on your FAFSA, there is College Goal Sunday coming up on Sunday, March 7th. I'll put that again in the chat, but you can go to collegegoalsunday.org. I thought I had it ready to go in the chat here. But that is an event where they will go over everything FAFSA and help you file it that day. So free filing. So you never have to pay to file your FAFSA. There are companies that are going to charge you out there, but there's lots of free resources if you need help filing that FAFSA. So I'll put that in the chat for everybody too.
Yes, and Stephanie, can you please put in the chat for them to go to www.fasfa.ed.gov. That would be the correct FAFSA. Yes.
Right. I put that in the chat for everybody.
Thank you so much.
I had a question for the 21st Century Scholars.
Yes.
So I'm actually a 21st Century Scholar, but I haven't had like a campus visit yet, and I don't really know how to go about that since, you know, everything's been virtual.
Do you know what institution you're going to be going to?
I plan on going to IE Bloomington.
Okay. So this is what I want you to do. I want you to go to www.in.gov. And have you created a Scholar Track account?
Yeah, it's already made.
Okay, so have you been on there to look in there?
Yeah, it wasn't very specific on like how to do the campus visits, because I tried to schedule one, but it was confusing.
Okay, so what you will have to do is get with the institution to see when they have it, because with 21st Century Scholars, they will allow you to see what award you're eligible for. And depending on what you put on your FAFSA, have you completed your FAFSA yet?
No, I'm only a junior right now.
Oh, okay, so you still have another year.
Yeah, correct me if I'm wrong, but Rhea, you're just wanting to satisfy that Scholar Success Program requirement where it says, you know, your junior year, you have to have a college visit. Is that what you're trying to do for that?
Yeah, I had already visited a couple of colleges, but it wasn't like an actual tour. It was just more like just going there.
Yeah, so from my perspective with that program, you can report that. A lot of the institutions actually have virtual tours right now. So you and I can connect and I can help you with this more. Also in the spring, I'm hoping to do a Ball State campus visit. I know that's not where you're planning to go. Last year is when we did our IU visit, but any of those can also qualify. So I can help you with some of that too, and getting that qualification taken care of.
Okay, thank you guys.
Yeah, I'll make a note to follow up with you on that one.
Thank you, Stephanie, for clarifying.
Yeah, no worries.
Great. Well, if there's any more questions, we'll move ahead to the rest of the presentation. You can still write them in the chat, or if you want to unmute or anything, but we'll go ahead with the rest of the presentation as well.
Okay, so I will pick up here. We have a few more slides to get through, and Shawnee she teed up a lot of this. So we'll go over the definitions of deferment, forbearance. We'll talk about grace period. So for deferment, you are not required to make payments toward your loan and no interest is accruing. Once the deferment period is over, you're responsible to start making those payments on that loan again. For most loans, you will not be required to pay back compounding interest, and you must meet certain criteria to defer the loan in the first place. So forbearance is the option where you're no longer must pay the loan, but your interest is still compounding. So again, Shawnee gave us some information on this. Once the forbearance period is ended, you are responsible to pay back that loan in addition to any interest that has capitalized during that period. So the forbearance must be approved and granted by whoever's servicing your loan. And then before I turn it back over to Erin, just to go over grace period. This is the time where you do not have to make payments on your loan. This is the period directly after the end of your loan period when you graduate school and when you must start making payments. But as Shawnee said, that it can also go into payment if you take a break. So being very careful in your communication and when you're leaving school, because your loan could become due and you do not want to go into default. It's typically 6 months post-graduation before your federal loan, that grace period kicks in. Okay, and I'm turning it back over to you, Erin, to close this out.
All right, great, thank you. So I just wanted to start it off with something like personal. So I don't know if you guys knew this, but if you are thinking about going to a 4-year school, please apply to private colleges. They have a lot of money to give that you don't even think is there. I never thought I would go to a private college in my life until I saw the scholarship they gave me. And I'm really glad I did it because now I don't have a lot of loans to pay back. And also please apply for every scholarship you can. I have a really distinct memory of it being summer, sitting at my parents' kitchen table and just writing scholarship essays all day. I was miserable, but I got so much money. So please, it's free money. And I know that it takes some work to sit down and write an essay, and that's annoying. You're gonna thank yourself later. Like, think of yourself in 4 years, you're gonna thank you. So
I can just third that, Erin, because I know Shawnee stressed it too. That is so important. That is my biggest regret, is not taking that time to do those essays. And it was pure laziness. The money is out there. There's grants, there's scholarships, a lot for minority scholarships,
and
a
women
lot
do
for, yes, if you're left-handed. I mean, there's just all kinds of things out there. There were a lot of great resources shared in the chat, but that exhaust your options and find that free money. It's free money because again, it takes effort to write the essays, answer the questions. It takes effort, and out of pure laziness, it's just sitting out there. So if I want to just stress that point.
Yeah. So that kind of goes into loan forgiveness. So just think of you applying for scholarships as you giving yourself that loan forgiveness. You're making your payment cheaper for yourself. And I think that's just great. So there are certain institutions that will help you like pay back some of your loans or forgive your loans entirely. I know that student loan forgiveness is a really big topic right now. But I personally know a couple friends who did Teach for America right after school. The Peace Corps is another great option for just having your loans go away. So that's pretty nice. What else do we have? Yeah, everyone has their own stipulation with loan forgiveness as well. So we have at the Union Home Foundation, if you go to this link, we have a lot of different resources to help you. So we do have tools like calculators, budgeting tools, articles, because I know this information is kind of dry and tedious. Sometimes it really does help to see it in front of you and be able to read that as well. So I think it is great, especially with the budgeting calculators, because as young adults, you know, you're just kind of starting to get into budgeting for yourself. All right, and then I think that we are opened up for questions. So, you know, feel free to ask anything. Thank you guys for engaging. You can ask personal questions. You can ask whatever you want. We're here to help you.
Great. Thank you, Erin and Krishana and Shawnee. Thank you as well for your help with this and your insight on FAFSA and all of that. I know we can kind of touch on it, but really hearing it from you, since you work with IB Tech and everything, that definitely helped as well. But Again, if you guys want to ask any questions in the chat, unmute, we'll stay on for a little bit, but thank you all for joining. And some of the questions that you guys had before were really great. So I hope you all kind of got something out of this and planning for your futures and everything. And thank you to the bigs that came as well with their littles.
Yeah, thank you all so much. This has been a lot of information to take in. You know, it can seem intimidating, but there are so many resources out there to help. And we do have really great partnership too with Ivy Tech. We have an admissions counselor that's dedicated just to working with bigs and little. I mean, she works with other people too, but she's kind of our go-to. And we'll get all of the resources that were listed in the chat compiled and sent out to this group as well. But knowing too that Big Brothers Big Sisters can be a resource. We try to get information out, but sometimes we're a tunnel and we get stuck with being able to push so many different things out. But it's never too early to start thinking about how you're going to pay for college. I love that Janae mentioned Jaden's a sophomore this year, and yes, we will continue to have sessions like this every year for our bigs, littles, and their families. But it's never too early to start thinking about that and start getting familiar with the language and subsidized and unsubsidized, all of that information. So I've learned a lot. I do want to make sure if anybody has any other questions from the attendees to make sure I'm not cutting anybody off.
Click this.
One thing I had put in the chat too, Big Brothers Big Sisters for our graduating littles. We do offer scholarships that are specifically just for our littles. So as you're little and you're graduating our program and graduating high school, you'll have gotten information specifically about that and how to apply. Now, our resources change every year, but we do have one scholarship from Strata Education Network. That is a $5,000 multi-year scholarship. So that one's pretty cool. And typically our pool of littles who apply tends to be pretty small. So usually everyone that applies and shows interest gets some level of money, at least $500, if not $1,000. So I would encourage all of our littles to keep that on your radar and make that a priority, again, because it's free money for your education that you won't have to pay back later on. So